The market is brutally indifferent to your opinions, your hopes, and your fears. Most traders think they can sense a top or a bottom by watching price charts or following headlines. They can't. The truth is harsh. The market doesn't announce itself. It whispers, it hints, it teases, but it never shouts. Amateur traders chase euphoric highs and panic at plunging lows. Professionals, those who follow the path of Jesse Livermore, wait. They watch the tape. They observe the subtle rhythm of orders, the pressure building at key levels, the silent signals of insiders positioning themselves before the crowd even notices. Livermore once said, "The game taught me the futility of guessing." He wasn't talking about price predictions. He meant reading the behavior behind the numbers. Imagine a stock dropping 15% in 3 days. Headlines scream doom, social media fuels panic, and amateurs sell everything they own. A professional doesn't react. They watch the tape. They see large buy orders appearing at round numbers, volume spiking at pivotal points. That's your signal. The market is hinting at exhaustion, not yelling it. Those who follow these whispers gain an edge. The tape tells the story that the price chart cannot. It shows liquidity, the intentions of large participants, and moments when trends are ready to reverse. Discipline is everything. Amateurs see only what they want to see. They buy when everyone else is euphoric and sell when fear takes over. Professionals learn to wait. They size positions carefully at uncertain points, adding only when confirmation appears. Patience is a lever that amplifies profits and minimizes mistakes. Livermore treated the tape as a living narrative. Every trade he made started with observation, not speculation. It is the act of watching, not acting, that separates winners from losers. Waiting is itself a position. Doing nothing when everyone else is panicking can be more profitable than making the wrong move. The tape is not just numbers on a screen. It is the heartbeat of the market. Large orders at key levels, repeated transactions, and subtle shifts in speed all tell a story. Professionals learn to read it, to sense when accumulation or distribution is taking place, and to act only when the signals are aligned. Livermore often described trading as a game of patience. The market will offer opportunities repeatedly, but it only rewards those who understand its language and wait for the precise moment to act. Those who ignore the tape act on hope, fear, or speculation, and hope in the market is an expensive mistake. Consider a scenario: a stock has dropped heavily, appearing to find support at a round number. Amateurs see only the pain, the losses, the fear of falling further. They panic and sell. Professionals watch the tape. They notice large blocks being absorbed at that level, repeated purchases that quietly prevent further decline. The tape whispers. Accumulation is occurring. This is the moment to position carefully, cautiously, waiting for confirmation from price movement. Entering without proof is reckless. Livermore's maxim was clear: never act without confirmation. The tape doesn't lie, but humans do. Recognizing the difference is the line between survival and ruin. The edge comes from noticing what others overlook. Most traders are busy reacting to headlines, rumors, and price swings. They mistake volatility for opportunity. Professionals interpret behavior, reading the signals the market provides in real time. When you learn to see the patterns in the tape, large orders absorbed at pivotal points, the hesitation before a surge, the subtle imbalance between supply and demand, you start predicting tops and bottoms before the broader market even senses them. It's subtle, it's precise, and it requires calm discipline. Here's the counterintuitive truth. Missing a trade is far less costly than entering without confirmation. The temptation to act is the mind's greatest trap. Amateur. Traders act on impulse. They chase patterns and news, convinced they can outsmart the market. Professionals embrace patience. They understand that doing nothing can be a position in itself, sometimes the most profitable one. Livermore built his fortune on these principles. He observed the tape, understood human behavior, and waited for exact alignment before risking capital. The key to mastering tops and bottoms lies in observing the market without interference, listening to the whispers of the tape, and allowing your trades to emerge only when the signals are undeniable. Discipline, patience, and observation create a mental edge that price charts alone cannot offer. Amateurs may panic and react. Professionals observe and interpret. The tape tells the story. Your job is to listen. Every large trader, every institutional order, every subtle shift in speed or volume leaves a breadcrumb. Follow these clues, and you move from guessing to knowing, from hoping to acting, from amateur to professional. By the time most traders notice a reversal, it's too late. By the time the headlines catch up, the move is already underway. But by learning to read the tape, you see it first. You see exhaustion before it becomes obvious. You spot accumulation or distribution before it explodes into a trend. You wait, you confirm, you act with precision. That is the essence of professional trading. That is the hidden edge that separates the winners from the masses who lose to fear and greed. Patience is power. Observation is clarity. The tape is the truth. Act only when it speaks to you, and you'll start seeing the market the way Livermore did. The tape is the market's language. It does not lie, it does not exaggerate, and it does not cater to emotion. Every trade executed, every order placed, is a signal. Jesse Livermore understood that size, speed, and repetition reveal intent. Large blocks at pivotal points, executed with urgency or hesitation, tell a story amateurs cannot see. Professionals interpret these signals. Amateurs panic. The difference is observation versus reaction. The tape is alive, and those who learn its rhythm gain insight into potential tops and bottoms before the broader market realizes what is happening. Imagine a stock hovering near support after a week of heavy selling. Headlines are bearish. Amateurs flee, convinced the bottom is gone. The tape, however, tells another story. Repeated purchases at round numbers begin to absorb the selling pressure. Large blocks are quietly accumulated, executed without panic or headline noise. The speed of execution shows conviction. Faster, decisive trades indicate strong interest. Scattered, hesitant trades reveal uncertainty. Repetition confirms that this is not a random fluke, but deliberate positioning. Livermore would watch these subtleties for hours, letting them unfold, knowing that patience often generates more opportunity than instinct. The protocol begins with identifying pivotal points, key levels of support and resistance where significant price action has occurred before. These levels are not arbitrary. They represent moments where supply and demand collide. Once a pivotal point is identified, the tape becomes your guide. Observe for large order clusters. Are they absorbing shares, or are they distributing shares to the market? Next, note the speed. Are these orders executed rapidly, signaling urgency, or slowly, suggesting measured accumulation? Then confirm through repetition. The market rarely reverses on a single transaction. Patterns emerge when similar behavior repeats, creating a story of potential exhaustion or buildup. Professionals interpret these signs, amateurs dismiss them. Positioning is critical. Enter small. Risk management is non-negotiable. Even when the tape signals alignment, the market can remain irrational longer than you expect. Incremental entry allows you to participate without overcommitting. Add positions only as confirmation solidifies. Stop. Losses protect capital. They are not optional. Livermore's discipline hinged on strict rules. Never gamble on a guess, never ignore confirmation, and always respect the tape. Many amateurs treat these rules as optional, assuming instinct alone can navigate chaos. Professionals know that the market is precise, methodical, and unforgiving. Observing before acting ensures survival and maximizes potential reward. Counterintuitive wisdom is central to tape reading. Doing nothing is sometimes the best trade. Waiting is a strategy. Many traders feel compelled to act, believing inactivity is a wasted opportunity. Professionals know otherwise. Watching, absorbing data, and letting patterns emerge is more profitable than impulsive entry. The tape provides early warning signs: absorption at bottoms, distribution at tops, subtle shifts in momentum. When the price finally confirms the pattern hinted at by the tape, entry is timely and precise. The reward-to-risk ratio improves, and the psychological edge shifts decisively in your favor. Consider an example. A stock has risen 10% over 3 days, seemingly unstoppable. Amateurs chase the breakout, hoping for more. The tape tells a different story. Large blocks are sold repeatedly at the ask. Speed and size indicate distribution. Price may still rise, but the professionals are exiting. The amateur, seeing only price, continues to buy. The professional, seeing the tape, waits, knowing that confirmation of the top is imminent. When the reversal occurs, the professional profits while the amateur panics. This is the essence of tape reading: seeing the unseen, acting with evidence, and letting the market dictate the timing. Repetition is a psychological anchor. Observing repeated patterns in orders and volume builds confidence in the signal. Livermore emphasized that no single clue suffices. A consistent pattern, confirmed by multiple aspects of the tape, forms a reliable basis for decision-making. Amateurs ignore repetition. chasing. Price swings or headlines. Professionals watch carefully, understanding that mastery is in the details, in the small signals that precede large moves. The protocol concludes with alignment. Tape signals must coincide with price behavior and volume confirmation. Alone, any signal is incomplete. Together, they provide a clear picture of potential tops and bottoms. Enter incrementally, manage risk, and observe. Let the tape dictate your actions, not opinion, not speculation. This is the professional mindset that separates consistent winners from reactive amateurs. By following these steps, identifying pivotal points, observing size, speed, and repetition, confirming alignment, and entering incrementally with disciplined risk management, you gain an edge in predicting market tops and bottoms. The tape is your guide, patience your weapon, and discipline your shield. Professionals act when evidence aligns, amateurs act on impulse. This distinction is the dividing line between survival and loss, profit and regret. Next, we will explore the psychological traps that make most traders ignore these signals, and how mastering your mind is as critical as mastering the tape itself. Understanding these pitfalls will allow you to interpret the market without emotion and exploit opportunities that others miss. Observing the tape is only half the battle. Controlling your response to what you see is the other half, and together they form the foundation of professional trading discipline. The edge of tape reading lies not in prediction but in understanding behavior. Size, speed, repetition, and confirmation combine to reveal the market's intentions before price itself confirms. Follow the protocol, respect discipline, manage risk, and the market begins to speak a language few can hear, but those who do are positioned to act with precision, confidence, and control. Amateurs see price, professionals see behavior. This distinction is where the line between losing and winning is drawn. Most traders react. They panic when prices drop and chase when prices soar. Their decisions are driven by fear and greed. Jesse Livermore understood that the tape reveals behavior, not just numbers. Reading it effectively requires seeing past the chaos to the intentions of the market's largest participants. The tape doesn't lie. Humans do. Understanding this difference is the foundation of professional trading. Picture a market top. Prices have surged 8% in 2 days. Headlines are bullish. Social media fuels excitement, and amateurs buy with conviction. The tape, however, tells a different story. Large blocks are sold repeatedly at the ask. Speed and size indicate professional distribution. Volume expands, but price only inches higher. The amateur sees momentum, the professional sees exhaustion. Acting on instinct, the amateur enters late and often loses. Observing the tape, the professional waits, sizing small positions for the precise reversal. Discipline dictates patience, and patience amplifies reward. The psychological trap of impatience is the most dangerous. Humans crave action, but in trading, the wrong move is often worse than no move at all. Amateurs act on impulse, driven by the fear of missing out or the hope of instant gains. Professionals interpret signals, allowing the market to confirm patterns before committing capital. Livermore's maxim was simple: never act without proof. That proof comes from size, repetition, and speed on the tape. Aligned with price behavior at pivotal levels, waiting becomes a position. Inaction is strategic, not passive. Fear and greed distort perception. Amateurs overestimate risk in a temporary decline and underestimate it during euphoric rallies. Professionals recognize these distortions and use them to their advantage. Panic selling often precedes a bottom, while blind buying fuels tops. By watching behavior rather than price, traders can identify the extremes of emotion. When the tape shows absorption at a low, repeated large buys quietly stabilizing the market, professionals enter. When distribution occurs at a high, repeated sales absorb buying pressure, and they exit. Acting with evidence, not emotion, separates the winners from the masses. Consider a stock plummeting 15% over several days. Amateurs see a collapse and sell indiscriminately. The tape, however, reveals accumulation. Large blocks quietly absorbed at round numbers, repeated purchases preventing further decline. Professionals interpret this as a potential bottom forming. They enter incrementally, managing position size and risk, knowing that confirmation may take hours or even days. The reversal occurs gradually, and the professional profits while the amateur panics. Understanding the rhythm of accumulation versus distribution is the essence of tape reading. Repetition is the signal that validates a pattern. One large order can be noise, two can be a coincidence. Consistent behavior repeated across time frames, aligned with pivotal points, becomes proof. Livermore emphasized that no single transaction is enough to justify risk. Patterns must emerge, and confirmation from the tape must align with price and volume. Professionals wait for this alignment, while amateurs act prematurely. This discipline is a psychological advantage, protecting capital and increasing the probability of success. The paradox is simple, yet profound. Sometimes the best trade is no trade. Observing and waiting allows the market to reveal its intentions. Acting on impulse exposes the trader to unnecessary risk. Amateurs often misinterpret short-term volatility as opportunity, while professionals recognize it as context. They watch for subtle signals, the slight hesitation before a surge, the small absorption that indicates accumulation, and the repeated sales signaling distribution. These clues, imperceptible to the impatient, guide precise action. Psychological mastery is inseparable from tape reading. Observing behavior is half the skill, controlling your own reactions is the other half. Fear of missing out and greed for quick profit cloud judgment. Professionals control these impulses, entering only when evidence confirms opportunity. Livermore built his fortune not on instinct, but on disciplined observation, incremental positioning, and strict risk management. The tape provided the roadmap, his mind executed the journey. In practice, this means waiting for alignment, tape behavior, price action, and volume must all confirm the same signal. Enter incrementally, size positions small, and respect stop losses. Absent confirmation, the trade does not exist. Amateurs ignore this, chasing every perceived signal, while professionals preserve capital and build advantage. Observation, patience, and discipline create a compounding edge over time. Understanding the psychology behind market behavior is as important as understanding the tape itself. Fear drives panic selling, greed fuels speculative buying, and impatience leads to premature entries. Professionals leverage these patterns, interpreting the intentions of others, exploiting emotional extremes, and acting with evidence. The tape is their guide, behavior their map, and discipline their compass. By mastering psychological control and tape interpretation together, traders gain insight that amateurs cannot see. Large blocks at pivotal levels, repeated patterns, and alignment with price and volume provide the confirmation necessary for professional action. Acting prematurely or on impulse leads to losses. Waiting for the evidence leads to opportunity. The edge comes not from guessing, but from seeing what others overlook and letting the market validate your decisions. Next, we will examine concrete, real-world tape examples where Livermore predicted tops and bottoms before the broader market noticed. These examples will reveal how size, speed, repetition, and psychological discipline converge to produce profitable trades. Observing behavior and controlling your own impulses form the bridge between theory and profitable execution. And this understanding is what separates a professional from an amateur in every market cycle. Livermore's greatest trades often began with subtle whispers on the tape, signals that the broader market missed entirely. Consider a stock climbing aggressively over several days. Headlines are bullish, social media buzzes with optimism, and amateurs chase the breakout. The tape, however, reveals a different story. Large blocks of shares are being sold at the ask repeatedly. Speed and size indicate distribution. Professionals watching the tape recognize the exhaustion of momentum before price charts confirm it. Amateurs see only upward movement and buy blindly, often losing when the reversal comes. At bottoms, the process is reversed but equally subtle. Heavy selling exhausts itself over hours or days. Repeated purchases begin appearing at key support levels, absorbing supply quietly. Volume stabilizes, and price hesitates rather than collapsing further. Professionals enter incrementally, testing the market with small positions and strict stops. The tape provides the roadmap. It signals when absorption is sufficient to support a reversal. Livermore often profited millions from such trades, using small, calculated entries that became substantial gains once the trend reversed. The lesson is clear. The tape allows anticipation, not speculation. Acting on these signals requires patience, discipline, and precise observation. Understanding these patterns begins with pivotal points. Identify prior support and resistance levels, areas where supply and demand historically collide. Then observe the tape for large orders. Are these orders absorbing selling pressure, indicating accumulation, or distributing shares at a high, signaling a top? Speed and repetition confirm intent. One large block may be noise. Repeated blocks executed consistently show professional behavior. Aligning tape signals with price action and volume confirms a valid entry. Professionals interpret these details. Amateurs dismiss them, believing price alone dictates opportunity. Consider a stock that has surged 10% in 3 days. Amateurs buy, seeing momentum as an opportunity. The tape tells a different story. Large blocks are repeatedly sold at the ask, creating friction beneath the surface of the price. Volume rises, but the price only inches higher. This is a distribution. Acting on evidence rather than price alone, the professional waits. When the reversal occurs, often within hours or days, they enter incrementally and ride the trend from the very start, capitalizing on the mistakes of panicked amateurs who bought too late. The advantage lies in observation, not speculation. At bottoms, the pattern is subtle but equally instructive. After a sharp decline, repeated large buys appear at round numbers or prior support levels. The tape shows absorption gradually stabilizing the price. Volume increases, but price does not fall further, indicating that selling pressure is being absorbed. Professionals interpret this as the potential bottom forming. Incremental entries with careful position sizing and strict stops allow participation without excessive risk. Livermore emphasized observation and confirmation over instinct. Entering without alignment of tape, price, and volume invites unnecessary loss. Repetition on the tape acts as proof. One large buy or sell order may be a coincidence, two may be luck, but consistent patterns, repeated over time, indicate intent. Professionals use this as confirmation before risking capital. Observing multiple instances of similar behavior across different price levels and time frames increases confidence. Amateurs ignore repetition, acting on impulse or emotion. Professionals gain an edge by combining tape signals with price action and volume, ensuring that every trade is evidence-driven. A practical example illustrates the difference between amateurs and professionals. A stock plummets 15% over several days. Amateurs panic and sell indiscriminately, fearing further decline. The tape, however, reveals absorption. Large blocks quietly purchased at round numbers prevent the price from falling further. Professionals recognize this accumulation, enter incrementally, and manage risk. When the reversal unfolds, they profit while amateurs panic. Understanding this rhythm, distribution at highs, accumulation at lows, creates a powerful advantage. Counterintuitive wisdom remains critical. Patience is often more profitable than action. Observing and waiting allows the market to reveal its intentions. Acting on incomplete or ambiguous signals exposes the trader to unnecessary risk. Professionals watch for subtle clues, hesitation before a surge, absorption that stabilizes price, repeated sales signaling distribution. Acting only when tape, price, and volume align produces the highest probability trades. Livermore built his fortune on this approach, consistently interpreting signals ignored by amateurs. Alignment is the final piece. Tape behavior must coincide with price action and volume confirmation. Entry is incremental, positions are small, risk is tightly managed. Professionals follow the evidence, letting the market guide their decisions. Amateurs, in contrast, act on hope, speculation, or emotion, often losing to patterns they cannot see. Mastery comes from recognizing professional behavior on the tape, interpreting psychological extremes in the market, and acting with evidence, discipline, and patience. By observing real-time signals on the tape, confirming with price and volume, and entering strategically, traders gain an edge that amateurs cannot replicate. Large blocks, repeated orders, and subtle shifts reveal tops and bottoms before conventional indicators confirm them. Professionals use this to enter incrementally, manage risk, and profit from the errors of emotional traders. The tape provides foresight. Discipline converts foresight into results. Now we consolidate everything. Predicting tops and bottoms like Jesse Livermore requires a disciplined framework, a cheat sheet that merges tape observation, psychological mastery, and incremental positioning. First, identify pivotal points. Support and resistance levels are not arbitrary. They are zones where supply and demand historically clash. The tape reveals whether these levels are holding or breaking. Professionals watch these points closely, noting large orders, repeated trades, and shifts in execution speed. Amateurs often overlook them, chasing price movements and reacting to emotion instead. Next, observe the tape. Size, speed, and repetition provide the clearest signals of professional intent. Large blocks executed decisively at key levels indicate conviction. Repetition confirms it is not a coincidence. Are the orders absorbing selling pressure at the bottom or distributing shares at the top? This is the difference between opportunity and risk. Professionals interpret these clues. Amateurs ignore them, believing that price alone dictates action. When the tape, price, and volume align, the evidence is strong. Acting at that point maximizes the reward-to-risk ratio while preserving capital. Confirmation is the next critical step. Tape signals alone are insufficient. Align them with price behavior and volume. For example, repeated large purchases at a support level only matter if the price stabilizes and volume reflects absorption rather than panic. At tops, heavy selling must be met with hesitant price advance and volume expansion, indicating distribution. Professionals wait for this confirmation. Entering without alignment is speculation, not trading. Livermore's discipline required proof he never committed without it, and neither should you. Positioning must be incremental. Entering small allows the trader to participate without overexposure. Pyramid carefully as confirmation continues. Even the strongest tape signals can fail temporarily, and small positions protect against sudden reversals. Stop losses are non-negotiable. They safeguard capital and preserve mental clarity. Professionals manage risk rigorously. Amateurs often ignore it, assuming instinct or hope will prevail. Discipline in size and risk management is as crucial as understanding the tape itself. Patience is a strategic tool. Waiting is not inactivity, it is a position. Observing the market allows subtle patterns to reveal themselves. Absorption at bottoms, distribution at tops, hesitation before a surge. These are all signals that require time to confirm. Acting prematurely exposes the trader to unnecessary risk. Professionals understand that missing a trade is far preferable to entering on incomplete evidence. Livermore repeatedly emphasized that the market whispers before it screams. Listen first, act second. The psychological dimension cannot be overstated. Fear and greed cloud judgment. Amateurs act on impulse, chasing gains or fleeing losses. Professionals interpret behavior, both of the market and of other participants, before committing capital. The tape is a reflection of human behavior, and those who understand it gain insight that others cannot see. Emotional control is as vital as technical observation. Mastery arises from combining evidence-driven action with disciplined psychological control. Consider practical application. At a potential bottom, repeated large purchases absorb selling pressure at a pivotal support level. Price stabilizes. Volume confirms absorption. The professional enters incrementally, setting tight stops and sizing conservatively. As the trend reverses, additional positions may be added, capitalizing on early insight while minimizing risk. At a top, repeated sales at a key resistance, a slowing price advance, and expanding volume indicate distribution. The professional waits, exits, or shorts carefully and avoids chasing the momentum that traps. Amateurs. Observing these patterns in real time creates a consistent edge. The cheat sheet, then, is straightforward but powerful. Identify pivotal points, observe size, speed, and repetition on the tape. Confirm alignment with price and volume. Enter incrementally. Manage risk with stops, and employ patience as a strategic position. Discipline in each step transforms observation into profitable action. Professionals act with evidence, amateurs act on impulse. Following this process converts market noise into opportunity, anticipation into execution, and patience into profit. By mastering these steps, traders gain clarity in an otherwise chaotic market. Large orders, repeated patterns, and alignment provide early signals that allow prediction of tops and bottoms before conventional indicators. Incremental positioning and strict risk management protect capital and amplify gains. Observing, confirming, and acting with discipline ensures that the market's whispers become actionable insight. Professionals exploit emotional extremes of the masses, converting their patience and observation into consistent profitability. Finally, integrate this framework into your trading mindset. Cut losses fast, size positions conservatively, wait for confirmation, and own your process. Observation, psychological discipline, incremental execution, and patience together create an edge few can replicate. The tape speaks first, the professional acts second. Missing a trade is acceptable, taking action without proof is costly. Follow this cheat sheet consistently, and you align with the mindset and methods that made Livermore legendary. If you have learned to read the tape, the next step is combining these signals with trend confirmation and momentum analysis. Doing so multiplies your precision, allowing you to anticipate market movements with even greater reliability. Mastery of the tape is the foundation. Integrating it with a broader technical context is the next frontier. Discipline, observation, patience, and evidence-based action will carry you there.